Dear students, Namaste, welcome back. I am here with the next illustration. So, in the units Accounting for Royalties, illustration number 9. Mr. Krishna wrote a book on advanced accountancy and got it published with Nandini Publishers on the terms that royalty will be at rupees 60 per copy sold, subject to a minimum rent of rupees 1 lakh per annum. So here he has given the two information, that is rate of royalty is rupees 60 and the minimum rent is going to be 1 lakh rupees per annum. So that is 1 lakh rupees will become a constant for all the years, with the right to recoup short workings over a period of 2 years after the year in which short working arises. So 2 years has been given to recover any shortage, if any. So prepare, so short working arises. So he has given the details. In the year 2015, number of copies printed 1300 and unsold copies was 100. In the year 2016, 1800 copies printed but unsold copies were 200. 2017 year, 3000 copies were printed and 500 copies was unsold. 2018, 4500 copies were printed, 200 copies were not sold at all. 2019, 1600 copies were printed, again 150 copies were not sold. So prepare a minimum rent account, a royalty account, short working account, Krishna's account for 5 years in the books of Nandini Publishers. Also prepare Nandini Publishers account in the books of Krishna. So this is the problem. So this kind of problem I have already solved once, I believe. If you check my previous problem videos, so you are going to find the same kind of problem. So when he gives a opening stock, that is number of copies printed, and unsold copies, that is closing stock. So we are supposed to find the sales. Clear? We are supposed to find sales, because sales only royalty always calculated, not on the number of books printed. So keep that in mind. So let us calculate sales. So working note, calculation of sales. So sales equals opening stock minus closing stock. So that difference is exactly, we are going to call it as a sales. So let us look into the first year. So open a table. Year, number of copies printed, opening stock, closing stock, and sales. So 2015, number of copies printed 1300. So opening stock was 1300 itself. So that is number of copies printed only. Closing stock was 100, which is unsold, 100 books. So 1300 minus 100. So sales for the year 2015 was 1200 books. In the year 2016, number of copies printed 8000. So what was the opening stock? Previous year closing stock is the opening stock for the next year. So 100 books carried down to the 2016 plus 1800 books which has been printed in the year 2016. So 100 plus 1800, that is equals to 1900 books. Out of unsold books, that is closing stock, 200 books. So 1900 minus 200, so the sales will be 1700 books. In the year 2017, so how many books has been printed? 3000 books has been printed. Clear? So what was the closing stock of the previous year? 200 books. 200 plus 3000. 3,200. So in the year 2017, unsold books was 500. So 3,200 minus 500, 2,700 books were sold in the year 2017. Next, moving further, 2018. So previous year closing stock will become opening stock, that is 500 books plus 4,500, that is in the year 2018 number of books printed 4,500. So 500 plus 4,500, 5,000 books. So closing stock for the year 2018 was 200 books. So 5,000 minus 200, sales for that year will be 4,800 books. In the year 2019, there was a 1,600 books has been printed. So previous year closing balance was 200 books. So 200 plus 1,600. So that year books availability was 1,800, out of which 150 books were not sold, that is closing stock unsold copies, minus 150, that is 1,800 minus 150 books. So the sales for the year 2019 is 1,650 books. So we are able to, we would completed with the working note and we could able to identify the sales. So now look at 2015, 1,200 books were sold. 2016, 1,700 books were sold. 2017, 2,700 books were sold. 2018, 4,800 books were sold. 2019, 1,650 books were sold. So this is about sales identification. So after finding the sale, we are supposed to prepare an analytical table where we could able to get all the information from where we can transfer the amount and accounts to the respective accounts. We can transfer all the transaction to the respective account. So open analytical table with the 10 columns, that is year, number of copies so sold, royalty payable, royalty rate, royalty payable, minimum rent, short working, surplus, short working recovered, short working not recovered, and the amount payable. So go to the year column 2015. How many number of copies have been sold? Check out the working note, 1,200 books. So 1,200 at the royalty rate of 60 rupees. So 1,200 into 60, that comes to 72,000 rupees. But for that year, minimum rent has been fixed in all the year 1 lakh rupees. All the 5 years, whatever the minimum rent has been fixed, it is a constant minimum rent, 1 lakh rupees. So there is a short working of how much? Because minimum rent is greater, royalty payable is lesser. So there is a short working. 1 lakh minus 72,000, short working is 28,000. Is there any surplus? No. Short working recovered? No. Short working not recovered? No. Amount payable 1 lakh rupees. So now 2016, how many number of copies sold? 1,700 copies. So selling price 60 rupees. So 1,700 into 60, 1 lakh 2,000 rupees, and the minimum rent was 1 lakh rupees. So surplus was there, that is because minimum rent column is greater and royalty payable is greater and minimum rent column is lesser. So short working nil, surplus 2,000, short working recovered 2,000, short working not recovered nil, amount payable 1 lakh rupees. So next is 2017. 2,700 books has been sold in the year 2017 at the rate of 60 rupees. So 2,700 into 60, 1,62,000 rupees. Minimum rent is 1 lakh. In this case also royalty payable is greater. Clear? Royalty payable is higher. So then we are more than the minimum rent. So we are under surplus. So there is no short working. Royalty payable minus minimum rent, that is 1,60,000 minus 1 lakh. So 60,000 rupees is the surplus. Short working recovered So how much short working, that is in the year 2015? 28,000, out of which we could able to recover in the year 2016 was 2,000 rupees. So now balance 28,000 minus 2,000, 26,000. So we are recouping the short working of 26,000 in the year 2017. So the balance is 1,62,000 minus 26,000. So the balance amount payable is 1,36,000 rupees. So next, further moving on to 2018, 4,800 was the number of copies sold at the rate of 60 rupees. So royalty payable is 2,88,000 rupees. Minimum rent 1 lakh rupees. So 2,88,000 minus 1 lakh. So surplus is 1,88,000 rupees in the year 2018, because there is no short working. Short working recovered nil. Short working not recovered also nil. So amount payable is 2,88,000 rupees. In the year 2019, 1,650 books were sold at the rate of 60 rupees. So 1,650 into 60, 99,000 rupees. So there is a short working of 1,000 because minimum rent 1 lakh rupees. So there is no surplus. Short working 1,000, short working recovered nil, short working not recovered nil. So amount payable also 1 lakh. So we are done with the analytical table. So next we are further moving to transferring the amount to respective ledger account. So that is open minimum respective ledger account. So that is open minimum rent account with the 6-column table. Date particulars rupees, date particulars rupees. So 2015 to Krishna account 1 lakh rupees. 2015 by royalty account 72,000. There was a shortage of 28,000. By short working account 28,000 rupees. Both the side total 1 lakh, 1 lakh. In the year 2016, to Krishna account 1 lakh, 2016 by royalty account, that is by royalty account in the year 2016 was 1 lakh 2,000 rupees. So we are greater than the minimum rent. So 1 lakh rupees by royalty account, 1 lakh both the side. So next further we are moving into the third year, that is to Krishna account. So in the year 2017 there was a amount payable 1,36,000 rupees, because in the third year we could able to produce more than the minimum rent, that is 1,62,000. Out of that 1,62,000, 26,000 short working recovery had happened. So the left out is 1,36,000. So in the year 2017 we are going to transfer the money to Krishna account 1,36,000, by royalty account 1,36,000. In the fourth year 2018, to Krishna account 2,88,000, because there is no short working, there is no short working recovery, there is no short working non-recovery. So that is why entire amount generated as a royalty we are going to transfer it to minimum rent account. So 2018 to Krishna account, that is how much? 2,88,000, by royalty account 2,88,000. 2019 to Krishna's account there was a short working of 1,000. So we are going to transfer it to minimum rent account. So that is to Krishna account in the year 2019 1 lakh. 2019 by royalty account 99,000, by short working account 1,000. Both the side total 1 lakh, 1 lakh. So we are done with the minimum rent account. So further we are moving on towards a royalty account. So open a royalty account. So royalty account, whatever the amount is reflected under royalty account column, that we are going to reflect in this table. 2015 to minimum rent account, how much we could generate as a royalty? 72,000. 2015 by P&L account 72,000 rupees. 2016 to Krishna account 1 lakh. 2 short working account, there was a short working recovery had happened out 2000 rupees. So short working account 2000, so 1 lakh 2000. By P&L account 1 lakh 2000, both the side total 1 lakh 2000 and 1 lakh 2000. In the year 2017, to Krishna account 1 lakh 36,000 rupees, and to short working account 26,000, because in the first year 28,000 was the short working. In the 2016 year we could able to recover 2,000 rupees. So in the third year, that is 2017, we are recovering 26,000 rupees. So short working account 26,000, by P&L account 1,62,000. Both the side total 1,62,000, 1,62,000. In the year 2018, to Krishna account, there is no any short working, there is no any short working recovery as well. So directly transfer entire amount 2,88,000 rupees 2018 by P&L account 2,88,000. Both the side total 2,88,000, 2,88,000. In the year 2019, to minimum rent account 99,000, because there was a short working of 1,000. So 2019 by P&L account 99,000, both the side total 99,000, 99,000. So next we are further moving towards short working account. So open a short working account with 6 column table, date particulars rupees, date particulars rupees. In the year 2015, to minimum rent account, how much first year short working? 28,000, 2015, by balance carried down 28,000, both the side total 28,000 and 28,000. So next 2016, to balance brought down 28,000 rupees. 2016 credit side by royalty account. In the second year we could able to recoup 2,000 rupees. So by royalty account 2,000, by balance carried down 26,000 rupees. Both the side total 28,000, 28,000 rupees. In the year 2017, to balance brought down 26,000. In the year 2017, by royalty account 26,000, because we could able to recover entire short working in the year 2017. So there is no any carried down figure for 2018. So 2018, to balance brought down nil. 2018, by balance carried down nil. So next further in the year 2019, there was a short working. So to minimum rent account, how much short working? 1,000 rupees. So 2019, by balance carried down 1,000 rupees. So the same has been carried forward to the next year, that is 2020, to balance brought down 1,000 rupees. So we are done with the short working account. So next we are further moving on towards Krishna account. So open Krishna account with 6 column table, date particulars rupees, date particulars rupees. In the year 2000, rent fixed for all the year 1 lakh rupees standard minimum rent in this problem. So 1 lakh rupees by bank account, we are doing a Krishna account. So Krishna account 2015, to bank account 1 lakh rupees. 2015 by minimum rent account 1 lakh rupees, both the side total 1 lakh, 1 lakh. 2016, to bank account 1 lakh rupees. 2016 by royalty account 1 lakh rupees. Why minimum rent, why royalty? Because that year there was a short working, and second year in the year 2016 directly it is a above the minimum rent was lesser and royalty was greater. In the year 2017, to bank account 1,36,000, by royalty account 1,36,000. In the year 2018, again to bank account 2,88,000. 2018 by royalty account 2,88,000. Both the side total 2,88,000 and 2,88,000. And in the year 2019, to bank account 1 lakh. And 2019 by minimum rent account 1 lakh, because there was a short working of 1,000 rupees. So at last we are preparing a Nandini publisher's account. So that is, open a table with 6 column, date particulars rupees, date particulars rupees. As usual I say, what all you debited in the Krishna's account, credit all those in the Nandini publishers. What all you credited there, you debit over here. So Nandini publishers account 2015, to minimum rent account 1 lakh, buy bank account 1 lakh, both the side total 1 lakh 1 lakh. 2016 to royalty account 1 lakh, buy bank account 1 lakh, both the side 1 lakh 1 lakh is the total. 2017 to royalty account 1,36,000, buy bank account 1,36,000, both the side total 1,36,000 1,36,000. 2018 to royalty account 2,88,000, buy bank account 2,88,000, total both the side 2,88,000 2,88,000. 2019 to minimum rent account 1 lakh, buy bank account 1 lakh, both the side total 1 lakh 1 lakh. So we are done with this problem. So I'm going to end up this problem over here because we completed. So I'll be come back soon with one more problem on accounting for royalties with a different adjustment. So until then, take care, see you soon, bye bye, and stay safe. Copy the problem and practice without fail. So bye bye, take care.